Market trend extends decline to trend near day's low on the back of bargain buying. The mid-cap index sheds over 300 points. NBFC is punished in trade today.
Power stocks enthused on hopes of a likely stimulus. Sources tell CNBC TV18 that the government is expected to pump in 17,000 crore rupees via the Power for All Saubhagya scheme.
Housing finance companies like Gruh Finance and Repco Finance lose despite extension of the interest subsidy on home loans under the Affordable Housing Subvention Scheme till March 2019.
Shoppers Stop surges after Amazon picks up 5% stake. Both companies sign an agreement to open Amazon experience centers across Shoppers Stop network of 80 stores.
Capacity Infra off the morning's highs after listing at a whopping 50% premium to its issue price. The management reiterates that the company remains cash flow positive on the operational front. Hello and welcome to Business Lunch. I'm Nisha Podar and with me is Mangalam Malu, who's just back from a great vacation. Mangalam, good to have you back, but markets need a lot of rest. Take a look at the markets at this point, and there is no let-up in sight at this point. Nifty 50 around 9,839 levels. In fact, breached below 9,850 levels once again. Sensex sheds over 350 points in the trading session. MIDCAP index has also taken a deep cut, over 1.5% down. So looking at the past few days of deeper and deeper cuts with each passing day, the big question that we are asking is, are we convinced that we are in a genuine correction phase in this bull run? And I pose that question to Anuj Singhal. Tell us, Anuj.
Yeah, so, Nisha, this is clearly a case where the market is seeing big cuts, especially in the mid-caps. I don't know whether, of course, this is the first genuine correction. I mean, the market is telling you that, so don't need my answer on that. But the issue is that the market breadth is a problem. There's no improvement at all in the market breadth. The F&O volumes are surging as its expiry week as well. After a long time, the momentum is with bears, so that's the key. The Nifty is trading below its 20 and 50-day moving average. Large banks like HDFC Bank are making lows of the day, which is interesting. And of course, there's quite a bit of selling pressure in mid-caps. But a large part of this sell-off that you're seeing, the genesis of that is in the kind of rally that you've had previously. So that's, I think, the one reason. And I don't know. I mean, we have corrected about 2% from the high point, 2.5%. The high was 10,150. We are at 98.50. So about 300 points. So it's okay. Bull markets can correct 10% also, as we've seen in the past. As of now, there's no evidence to believe that this is one of those corrections, but things clearly, for now, are looking a bit soft.
All right, Anuj, things looking a bit wary as far as the frontliners are concerned. You spoke about the mid-caps itself. The index has lost, what, 900 points in the last two trading sessions. Is there more pain out there? And could it aggravate given the F&O expiry week?
Yeah, I think, Mangalam, that's an important question that you asked, honestly, and I think that's more relevant right now because what you're seeing is a big decline in the mid-cap index and small-cap index, but on back of a huge rally, the small-cap index, I think, is still up 30% more than that at last count, even after the decline. And I think the mid-cap index too would be up 22, 23%. So things can correct. I mean, the mid-caps and small-caps, the nature of the beast is like that. When they go up, things look good. But when they fall, in a matter of 10 to 15 days, you see about 20, 30% correction. So we are going through that correction. I think we're going through a lot of unwinding in the futures market, which is going to make market healthy. Of course, for someone who bought at 10,000, it's anything but healthy. But then, at the end of the day, the market did get overextended, and now it's seeing a correction. Easy to say with hindsight. But the short point here is that the market needed some trigger to correct. Maybe it got it in terms of that macro trigger, and it's now correcting. But my sense is that overall nature of the bull market is such that corrections are vicious and sharp, but they will present buying opportunities. Of course, in what stocks and what sectors, that time will tell. But for now, I think the market is going through that process where it's going to take out leverage positions and going to punish them.
Oh yes, Anuj, and in fact, at what point should one start buying, and where is the bottom? That is also difficult to judge at this point, but market correction nonetheless. Let's also take a look at the global action at this point, and politics really dominated trading, with Asian markets ending mixed as investors really digested the elections in Germany and New Zealand over the weekend. Now, Japanese equities, that bucked the trend of declines thanks to the optimism over a 2 trillion yen stimulus from Abe ahead of an expected early elections, snap elections. Now, a rout in Chinese property developers that dragged on Hong Kong shares as well, and the Kospi too reversed its early gains, falling for the 5th straight session in a row. Now, European markets that have opened marginally higher but have been in the red now after Chancellor Angela Merkel, remember, she won a 4th term in office on Sunday. But remember that she is going to be facing tough political negotiations as well to form a new governing coalition as well. Now, the Nationalist Alternative for Germany won parliamentary seats for the first time. Now, meanwhile, Brexit negotiations are set to resume talks in Brussels today after UK Prime Minister Theresa May asked for a transition period after March 29, 2019, when the UK officially leaves the European Union. So several data points that the European markets are watching out for, and global markets are getting impacted, with European markets in the red currently.
Absolutely, and you spoke about Theresa May. It looks like that is perhaps the reason why we're seeing that underperformance coming in the FTSE as well. So good time to get in some market opinion from the street. We caught up with Arvind Sanger, the managing partner of Geosphere Capital Management, earlier today, and he says that the markets have run ahead of the fundamentals and valuations. Not just that, Saurabh Mukherjee of Ambit Capital too believes that it's a little early to say if it's the beginning of the correction in the market or not, but let's listen into both these opinions.
I think that markets have run ahead of fundamentals and valuations, and maybe what ends up happening is that if this uncertainty persists, the markets, stay in a trading range, could fall a little bit, but may stay capped around the 10,000 Nifty range. Becomes kind of hard to break through on a decisive basis without more clarity on how the economic recovery is taking shape.
I think it's still too early to say that this is the beginning of a major correction, because by the time Q3 comes through, demonetization will make the YOY comparables for Q3 look pretty good. True data on consumer NPAs will be critical. If consumer NPAs, if retail NPAs, if housing finance NPAs continue clipping up, I think Q1 was pretty bad for housing finance. If Q2 NPAs in housing finance and retail clip up, I think then we are in real trouble. Then I think the long-awaited correction is upon us. If, on the other hand, retail NPAs, housing finance NPAs are all right in Q2, then I think I don't think I'll be calling this the beginning of the big correction just yet.
All right, that was some opinion coming in from the market masters. But let's move on and listen into some of India's biggest fund managers speaking under one roof at the Cafe Mutual Conclave, and this time with their call on the NBFC sector with regards to the valuations. That sector is taking a bit of a pounding as we speak.
There is an easy liquidity which has really helped most of these NBFCs. There is a large market which has been vacated by the traditional banks because they are struggling with their own set of challenges. But some of these things are likely to change. One needs to be extremely careful. I think only those players who have the deep pocket to raise capital, those players who have a strong risk management ability, who have the track record in terms of how they assess different cycles, and who have the ability to slow down their growth when they really believe that excesses are happening. Those are the NBFCs who over a longer period have done well, and I think this time won't be any different. I wouldn't be surprised, just like 90s, some of these NBFCs would get into deep trouble over the next few years. But I think that time is still some time away.
Everyone is of the opinion, and probably that's the view they've taken, is the PSU banks are going to be on a back foot in terms of lending, and there is this very large amorphous segment of lending to small and medium enterprises which is available.
We have by and large avoided most of the NBFCs on the equity side. We are invested on the debt side, and you'll be surprised, you'll know that most of these credit rating of the NBFCs have gone up. Many of them have become AAA right now. So we asked the credit rating agencies, are their credit rating is their credits improving? And they are telling us that the rating is improving. On equity, I am periodically questioned as to why we don't have NBFCs in the equity portfolio. My view is that at this point of time, we did bet on some of them earlier, but right now some of them appear to be costly.
Still hovering around the lower levels of today's trading session as far as the markets, the frontline indices are concerned. So let's get in some individual stocks which are buzzing around or perhaps losing from the high point of the day. Havells is one should come up for you. Havells, in fact, tried to make a bit of a recovery, but that recovery looks like it's being sold into the stock virtually flat. Another couple of stocks which are in focus, Just Dial is one, attempted a bit of a recovery, 3% from the low point of the day. That recovery too has been sold into. Just Dial is the one that should come up for you. And another one is Apollo Tyres. That one too has recovered around 2.6, 2.7% from the low point of the day. Again, hovering just above the flat line. But that's not all. A lot of individual stocks are buzzing in trade, and the leader of that pack is Shoppers Stop, as Amazon picked up 5% stake in the company. Remember, the companies have also signed an agreement under which Amazon experience centers will be opened across Shoppers Stop network of 80 stores, and Shoppers Stop as a result will sell 400 of its brands via the Amazon experience. Remember, valuation wise it was done at a lower price given the lower margins of Shoppers Stop. Priya Seth caught up with Govind Srikhande of Shoppers Stop and began by asking him about the details of this agreement and how it will impact the company. The most important point is the management's commentary on the margins, and here is what he had to say.
So we are profitable for the full year last year as well, and we will be profitable throughout the balance quarters for sure. And we should definitely see EBITDA change or EBITDA basis point change between 60 to 100 basis point during the year. Target we have kept for ourselves is hitting 8% EBITDA margin in about 24 months time, and I think they are very sustainable. No deal as of now with any group, and as I mentioned in Hypercity, we have been working on raising funds, and we are, I would say, at the last stage of discussion with multiple partners to really look at fundraising or some other alternative strategic arrangement, and we would be in a position to really announce something new in about 4 weeks' time.
All right, so that was Shoppers Stop. And Mangalam, remember that all retail companies will have to follow an omni-channel platform to catch the customers at all fronts. And that's why this tie-up and more of this could really be seen in the market of retail. Let's focus on another stock then, Ashok Leyland, that has confirmed plans to enhance their light commercial vehicle portfolio as well and boost exports in that particular segment. In fact, speaking exclusively to CNBC TV18's Jude Sanith, Nitin Sethi of Ashok Leyland has said that the company is aiming to increase market share in the LCV space and will also launch one new LCV product every 6 months.
We're not doing pan-India launch, so your numbers may not be known for some time. Let's say by the end of December when it will be pan-India launch, and if you see an incremental number in a short-term portfolio, you can attribute this to those plus. Hopefully, from our 15% market share which we have existing, and suppose the market share goes up by 2-3 percentage point, you can always say we are on the right track to increase our LCV market share. I think the company has taken a task to become a full-fledged commercial vehicle player. To do that, we have to become a full-fledged LCV player. Hopefully in the next 3 years, you will see every 6 months a new launch, and you'll see increasing market share every year. Today we are only addressing by 2 segments, which is 2.5 and 1 and 7.5. Today with those plus, we have addressed 1. Hopefully there are still big gap between 2.75 to 7.5. And our endeavor is to launch a product in every category as you go forward to become a full player. And the company over the next 3 years should be able to fulfill this whole gap to be a full-fledged LCV player.
All right, and that's not all. Capacity Infra, that stock has been buzzing around, though off the morning highs after a stellar listing, still rewarding the shareholders, especially on a day like today, with a gain of 43%. The allottees, the IPO allottees is what I mean when I say shareholders. Yash Jain, our colleague, caught up with Rohit Katyal, the ED and the promoter of the company, and began by asking him about the company's order book and margins going forward. Here's a slice of that conversation.
The order book currently stands at about 4,602 crores. 88-87% comes from residential, because that's the space where a lot of activity over the last 5 years happened. We see traction over the past 1 year in the commercial space, and that accounts for about 12 to 13% of the order book. So on the operational front, first of all, we have been cash flow positive throughout. In the last financial year, we had a positive cash flow of 60 crores. We see that improving year on year. As far as the investment activity is concerned, you are aware that we have done 2 rounds of private equity in the past, and that was primarily done to create the asset base, the strong asset base which the company owns. So going forward, as the asset turnover ratio improves further, there will be a dip in the capex 3 years down the line, and that would obviously mean that the company would be making cash at both the levels.
Big story for the day remains the likely stimulus by the government. In fact, some announcement on the power sector may really come in this evening when the Prime Minister addresses the BJP National Executive Meet. Here's a word coming in from the Power Minister R.K. Singh on what could be expected.
There will be a major announcement relating to the power sector on the 25th by the Prime Minister, and I mean, we are excited about it. We are very excited about it. This is something which will be very important for the people. Some things which need correction, we are going to correct. One is about the PPAs, making sure that the PPAs are signed and the PPAs are adhered to give confidence to those who invest. We are going to change the law to provide that those PPAs are enforced. We are going to provide for PPAs to cover 100% of the annual average demand of a particular state or a DISCOM.
All right, but the first advance estimates from the government are out for the Kharif output, and they show a decline. Well, Manisha joins us with more details. Manisha, what is the ground report, literally?
Well, not so good, really, because the sowing numbers were in any case on the lower side, and the monsoon is 5% below normal as well. And remember, the government comes out with 4 advance estimates at different stages, and the first advance estimates are slightly dismal. Not only are we 3% down on overall food grains, but almost everything is seen a decline from the previous year. When you look at the rice numbers, we are down 1.9 million tons from the year ago. Pulses stand in the same category at around 8.71 as compared to 9.42. Whether it's rice, pulses, edible oil, even cotton, where the sowing area, the acreage numbers were on the higher side, the output numbers seem slightly dismal. The only thing that's really standing positive is the sugarcane output estimates. We are standing at a very strong number there at almost 337.7 million tons as compared to 306 in the year ago. And when you look at the sugar output numbers as well, remember last year was the lowest in last 7 years, and we are standing tall at 24.5 to 25 there as well. So barring sugar, everything else is slightly on the weaker side.
All right, weaker side. But when we talk about weakness, Manisha, it is the markets we're talking about. Thanks, Manisha. And with that, it's a wrap on this edition of Business Lunch. Of course, market action will be taken forward by MIDCAP Radar. Stay tuned for that.